we are celebrating Women's Day here on ET now, and then what better time than to welcome in a management which is represented by the women on top, and we're talking about Miss Vartika Shukla. She's the CMT at EIL. She's been breaking the glass ceilings when it comes to the public sector entities as well. Ms. Shukla, thank you so much for making time and speaking with ET now. Appreciate you joining us. And first up, here's wishing you a very happy Women's Day as well. You've managed to break the glass ceiling in the public sector space, which is considered to be a lot more difficult. How's been your experience, and what's your takeaway?
Thank you so much. And it's my pleasure to be here with you on ET Now for this momentous occasion of Women's Day. First of all, let me compliment the channel and all the women who are leading from front today on this occasion. Coming to your question, my journey in the public sector has actually given me enough space, enough opportunity to actually excel and take on the areas of opportunity which have been thrown open over the last 3.5 decades in my career, both on the domestic front, on the international front. And there has been so much of diversity in experience that it has been very enriching and equally rewarding.
It's generally said that there are more gender biases as far as public sector units are concerned. What's your take on that, and what has been done to bridge that gap?
We have the highest women percentage in the complete oil and gas sector. We are about 12% women, and our women are steering very key positions in engineering, in construction, in technology, in finance, in project management, in procurement. So they are out there in the front, working shoulder to shoulder with their other team members. The second thing I would say is that in public sector, we are all equal. The policies which are outlined by the government have equal pay, equal opportunities. So it is up to oneself also how to work upon those opportunities, given the best, grow yourself, and pick up challenges, challenging assignments. And there is room in the public sector to actually, flower and bloom in terms of excellence.
Well, Ms. Shukla, let's shift focus and talk about the business of Engineers India now. If I have it right, at the end of December quarter, the order book of the company was close to 8,000 crore rupees, and it was a bit of concern to the analysts, wherein they said that the book-to-bill ratio is standing at the lowest in the 4 years gone by. Your take as to how order book situation is looking like?
We have an order book today of more than 9,000 crores, and the order inflow this year has been twice the order inflow last year. We had around 1,650 crores order inflow last year, that is FY21-22. And in this financial year, we have over 3,000 crore order inflow. This is what the growth has been. It's almost doubled in terms of the order inflow. This will show up in the top line and bottom line in the results, because these projects have a gestation period. They also have a time cycle of project implementation of about 3 years. So in a year or year and a half, it will begin to show in the growth in the numbers in terms of our results. Moving forward, I see huge growth, very robust growth in the sector of refining and petrochemicals. We are looking at 450 million tons refining capacity by 2030. Which is going to be very complex and very integrated with petrochemicals.
So, since you're saying order inflow momentum could be strong, should we expect FY24 order inflow to be in excess of 4,000 to 5,000 crores?
Now, if I could predict, I would love to. But yes, it would be just upward of what we have done this year, and significantly upward. It would be difficult for me to put you a number, because many of these discussions are negotiated. These are confidential. I think time will tell, and we will share with you the kind of volumes that we get next year.
Okay, at least the commentary suggests that it's going to be significantly higher in FY24. But given the fact that order inflow has been that strong, would you say that the conversion and execution will be strong as well? Because in the 9 months gone by, you have done a revenue growth of what, 18 to 20%, likely to better that in FY24 then?
Yes, absolutely correct. See, we had an impact of COVID for 2 years. A lot of our sites had a slowdown in terms of the workforce at site, and that is actually reflected in our results. There is also, therefore, the closure of projects which typically happen, which reflects on our both the top line and bottom line, is taking a little bit of time. And these closeouts actually then bring in the stream of the balanced revenue, and also, have a kind of de-risking in terms of the conditions of contract that we have in these projects, which I expect will be closed in the next financial year. So it will be a much better, much more robust performance in the coming year of 23-24. Both on the closure of the projects which are ongoing, as well as on the execution of projects which we have secured this year.
What about the revenue mix? What would be the split between consultancy and new turnkey projects?
I see that let me answer that in 4 parts. One is we see business and consultancy, which is going to be on the rise on the global front, where we have good margins, and the brand of EIL is recognized globally. Some of our clients are repeat clients, and I see that in a very robust growth on the international front. The second segment that I see in growth, wherein our order book has grown almost 2.5 times, is the infrastructure segment, where we do high-end data centers, we do the buildings of the IITs, the IIMs, and we do that high-end work in the infrastructure, which is likely to grow. Now, having addressed these 2 groups of jobs or groups of projects that we are doing, when we look at the rest of it, I see a healthy 50-50 mix of the LSTK OB and the consultancy. And the OB segment largely will have better margins that we are now garnering because of the nature of the work. See, the more complex these projects are, the more value we bring on the table, and that is where it fetches us a higher margin because we stand apart. We are differentiated from the other consultancies who are our competitors.
Okay, and Ms. Shukla, just before we let you go, also wanted to understand what's the outlook with respect to dividend payout policy, because some of these public sector entities are also looked as good investment bets by the retail audience as well. So the payout ratio has been around 7 to 8%. What does it look like it's going to be in FY24?
See, the dividend policy is a guideline of the government, and we are always complying more than the guideline. Typically, it's 30% of PAT, and we've been paying much higher than that. I can say that this year and the year onwards, our dividend is not going to be in any way lower than what we have paid in the past. And the actual numbers will be an outcome of the bottom line that we determine. But I can assure that it will, the growth I see, the projects we have, and the closure of projects and the realization of that revenue which will happen, under no circumstance the payout will be less, it will only be more.
Thanks so much for that, ma'am. Women are now making their mark in the financial industry across the world, but there is still a long way to go. A survey suggests women investors in India owned about 20% of financial assets as of 2022. Vamakshi joins us to talk about how women participation is only increasing.